Hello, everyone. Welcome to another episode in an exclusive four-part interview series showcasing SVCA's 2021 award winners. For today's interview, we are glad to have with us Ms. Claudia Chong from the Business Times, who will be interviewing Mr. Paul Santos from Wavemaker Partners for its win in both the VC Deal of the Year as well as VC Exit of the Year. Allow me to introduce our guests today. Claudia is a journalist at the Business Times. She was part of the team that launched the award-winning Garage, Business Times portal dedicated to coverage of startups and venture capital in Southeast Asia. And we also have Paul with us, managing partner of Wavemaker Partners. He led the establishment of the venture capital firm's Singapore-headquartered Southeast Asia office in 2012. Wavemaker is Southeast Asia's go-to investor for enterprise and deep tech startups. Out of the 140 plus companies it has backed, around 85% of them are in enterprise and deep tech. With over US 180 million in AUM across 3 funds, Wavemaker has seen 10 exits valued at close to US $700 million. These include TradeGecko's acquisition by Intuit and Mocha's and Coin.ph's acquisitions by Gojek. Prior to starting Wavemaker Partners, Paul was an entrepreneur who co-founded 6 companies and sold 3. Without further ado, I will let Claudia take it away from here.
Thanks so much, Sylvia. Hi, Paul. How are you?
Great. Good to see you again, Claudia.
Nice. And, congrats on the award wins, VC Exit of the Year and also VC Deal of the Year. I would really like to chat about TradeGecko because, this is a name that has been known for a long time in the ecosystem. You invested in TradeGecko's seed round in early 2013, if I'm not wrong, right? So when TradeGecko first pitched to you guys, what was the business idea like? And, many years later, now that you're looking back on the deal, is there anything that's interesting that stands out to you?
Well, thanks. Yeah, so it was my first B2B deal, right? We gave our term sheet late 2012. I think the official deal got done in 2013. And even today, right? If you think about all of the unicorns in the region, they're B2C plays. And so to do B2B in 2012, 2013 was, let's just say, wasn't really expected. And so that was part of it, right? So how many guys were thinking about global B2B SaaS in 2012-13 from Singapore? And what was interesting was, it started from their experience running a kind of a retail business. One of the insights, especially around order and inventory management, where they played was there's a lot of things that Excel is used for that maybe isn't what it was designed for. Right, Excel is a spreadsheet, right? And if you think about it, if you're an entrepreneur in the early stages and you're managing your orders and then your inventory, it makes sense to use Excel, right? But what happens is at some point in time, your business will achieve a certain scale where, you probably are getting cross-eyed trying to make sure that your numbers are correct and things add up on Excel. And it just made sense that, if there was a simple software you could use to do order and inventory management, why wouldn't you use it, especially if the price was right? And when you looked at the competition at that time, I remember there was one competitor out of Greece and one competitor out of LA. And actually my partner in LA, Eric, actually met that company and he met TradeGecko together with me. And the other thing that stood out was the LA company wasn't any better than TradeGecko. And, again, we think about it now as kind of obvious when you think about SaaS that you can get global customers. But again, it wasn't as obvious especially in Singapore at that time, right? We sometimes don't give ourselves enough credit that we can compete globally. But again, if somebody in Greece can do it, if somebody in LA can do it, and we can validate that, we can compete against the guys in LA, so we went for it. And when you start out, you always have these dreams of being able to attract customers from all over the world. And I remember when we would track, how many did we get this week, to how many did we get today, to, and it's almost, you expect to get a new customer regularly. It was a great journey. And so where they finally ended up with thousands of customers across 100 plus countries, with that 5 billion of transactions running through their platform, even if it took 8 years, it was still, for me, it was a gratifying journey to have seen them from the start to where they ended up. That's kind of what strikes me about this whole TradeGecko adventure.
For sure, it must have been quite a journey. Do you think there was a certain turning point for the company?
Yeah, so if you think about the ecosystem at that time, one of the popular phrases was this thing called the Series A crunch. I don't know if you remember that, right? When an ecosystem starts out, you can start with the angels, and then when you have the small seed funds coming out, everybody's wondering, can this company raise a Series A? And again, if you had consumer companies having a difficult time raising a Series A, imagine the degree of difficulty for a SaaS company in Singapore. But I guess they were able to get to a point of enough traction that they were able to get that interest. And I said during my acceptance speech that I really think that this was an ecosystem win, in the sense, right? Like we saw this company through JFDI, which is one of the first accelerators at that time. We were able to invest in them because we got the support of the NRF through the technology incubation scheme. 500 startups and Golden Gate joined us in the seed round. And when we were looking for the A, Open Space and Jungle stepped to the plate and said, let's do this. Let's try to build a company like this out of Singapore. And so it was good to see kind of the ecosystem, even in its early days, coming together. And I can't say it was planned, but the company had gotten enough traction and they had enough proof to excite the next round of investors to come along for the ride. And again, here we are.
Yeah, I agree. So when the deal with Intuit was announced, it was pretty pivotal, I would say. On my phone, I was getting so many messages from people being so excited. The thing about TradeGecko is that it has a lot of investors that are, we now know them as pioneer VCs of Singapore's ecosystem. And I was wondering, throughout TradeGecko's journey, there must have been a time where these investors banded together to help the company through a tough spot. Is there any story you can tell us about that?
Oh, well, just thinking about, again, just coming to the Series A, right? Startups raise money, but they never have, especially the early stage, maybe it's never is too strong. They rarely have enough capital to get to a point where they become break even or profitable, right? You're pushing growth. And so it's always a nervous time to say, okay, runway's coming up. Will we be able to land it, right? And so, the early stage investors or the seed stage investors were doing what we can to bring the Series A investors to the table. We all, I guess, did our part, trying to pitch it, trying to convince the Open Space and Jungle guys. Of course, they're not going to come in because of us. Let's be clear. They're coming in because of the founders. And yeah, at the same time, them deciding to come in, there's obviously some sharing of, thoughts about the company, thoughts about where we should take the company, and so on. And so sometimes, you could tag team with a couple of VCs to do a brainstorm with the founders. Sometimes, the founders will will call you, and you could go in on your own. And so, you just, at least this is how I try to play it, right? Like I believe the founders and the management should know what to do with the business. As investors, we're support. And even among the investors, there are lead investors and investors who will follow. So maybe in the seed round, we played the lead. But when the Series A happened, I gave up my board seat and I played more a supporting role. And sometimes Cameron will call me for a coffee, or sometimes he'll call me for can you run this little workshop with the team, or can we do this or that. So it's less around we meet together always and sort of be a brain trust for the founders. That happens once in a while, and then once in a while it's a couple of us, once in a while it's one of us, and all of us will hopefully have our own small contribution, and I will go back to the founders and the management and the whole team. We're really the ones who took it to the heights that it got to, and it wasn't a smooth journey, if you will. It was a roller coaster. That's why it's a cliche, as every other startup. But the point is, they crossed the finish line. The point is, they landed it well, and the point is, it's a win for the ecosystem. I always say, whenever anybody asks, nothing galvanizes the ecosystem like a win, nothing like a success, right? And now, and I say it, I mean it, that there will be a next generation of entrepreneurs who can look and not doubt that we can build world-class software companies out of Singapore. It's already been done.
Yeah, and there's definitely a lot of interest now around B2B tech. It's such a different sentiment compared to a decade ago.
Oh yeah, well, I'm all in.
Yeah.
so I believe it.
Yeah. Well, I mean, this is a good point to talk about GrowSari right now, because B2B tech platform in the Philippines, servicing Sari stores. There's a lot of excitement around tech like that, in Indonesia too. And for you, what did you see in the company, and how did you get to know the founders?
Okay, yeah. So a few things. So I actually started my career in consumer products. I was a brand manager, product manager at Procter & Gamble. So FMCG is I guess where I got my break, and I mean my start in my professional career. So I was quite familiar with the industry. In fact, one of my stints was a summer a summer training in one of the provinces in Manila, in Cagayan de Oro. And part of my job was to actually go to these sari stores and sell P&G products myself, right? And so I knew about the problem or the opportunity firsthand. I met the founders because my younger brother actually joined P&G also, and ER and Shiver is friends. And it's kind of like one of those networks where, hey, your brother's a VC, we're trying to do a startup, can we meet? And he set it up, and we met. And so, when they were kind of explaining what they were trying to do, I guess I had the unfair advantage of experiencing it firsthand. And so I thought there was an opportunity, and I was curious, but I didn't exactly buy into the first iteration.
What was the first iteration?
Yeah, it was more like a mobile POS, actually. And yeah, I remember, and we'll have a chuckle about it. Right? They came to the office in Block 71, in their suits and their long PowerPoint slides, BCG quality, and because they're friends of my younger brother, I kind of teased him a little. You guys are trying to get me to invest, and you guys haven't even quit. So how committed are you to this? And the POS system was okay. So I'm not sure I used this word, but I think I did. It's cute, But is it really solving the problem? In fact, one of the questions I asked them was, because you can justify this, right? You can justify the POS story, you get the data, you end up with the fintech and the analytics and all of that good stuff. I mean, I'm sure you can imagine how you can package this, right?
Yeah.
And so one of the questions I asked them was, whose side are you really on? Right? Are you on the side of the FMCG players? Are you on the side of the consumers buying from the sari-sari stores? Or are you on the side of the sari-sari store owner? Who do you really want to help? And they said, well, I think they wanted to be on the side of the sari-sari store owner. And then I said, okay, if that's the case, that's fine. Is a POS really what they need? Is that really what they want? Is that really the pain point that they want help for? Have you asked them? Because I said, I'm not sure that's it. Because if you think around 2016, 17, smartphones weren't really that widespread yet, especially among sari-sari store owners. Kind of, the lower end of the economic spectrum, right? Not too many of them could already afford smartphones. And so, if you had a feature phone, what would really be good for you? And they took the feedback and they went away. And then they came back and it was a pleasant surprise. They said, Paul, we decided that, we talked to them. We found out that, these salespeople would come during the middle of the day when they're trying to sell. And they could only go to buy, the goods in the wholesaler, and they'd have to spend for the transportation, obviously, and the time away from the store. And so when we said, okay, you can buy whatever you're buying in the wholesaler from me directly at the same price, and we'll deliver it to you. It was value. And the concept would be if we could prove that they could increase the share of wallet and grow the volume. Consumer goods is straightforward. If you sell more, the manufacturers or the wholesalers will give you more margin, right? It's a volume play, right? And so they were showing that over time they would increase their share of the sari-sari stores wallet, and then the belief saying, okay, there's something here. So we made the bet and we introduced them to one of our LPs who was a major wholesaler in the Philippines. They had one of these formats where it's kind of like a sari-sari stores would buy from there, but consumers can buy from there too. It's kind of in between a wholesaler and a grocery. And they let us try in their weakest outlet. And sometimes it's a location thing, like your competitor is in a better location than you. The sari-sari store owners might end up in that location versus yours. So it was their weakest outlet. And if I recall the numbers right, I think within 6 months, we quadrupled their business.
Nice.
And so then told me, okay, maybe we're on to something. It seems like it.
Seems like it. Well, I mean, the business has really grown since then. I mean, that's a great story. And I think it also just shows us how much of a gap there is, in many aspects, in many verticals of Philippines economy, right? And it's something that startups are meant to solve, but somehow Philippines, as a startup ecosystem, it seems overshadowed. Right? Overshadowed by Singapore, Indonesia, Vietnam.
It is true.
What's the reason for this? And there are only a handful of startups that have raised more than $10 million.
Yeah. Oh, it's a great question. It's a question I ask myself, right? So I was born, raised there, right? And so in many ways, I might have either A, a bias, or B, maybe a level of comfort or insight that maybe other investors don't have. So the first way I'd think about it is just think about the headlines, right? If you think about the headline numbers of Indonesia, it's an easy sell, right? The 260, 70, 80 million people with the GDP per capita growing. after the first couple of successes, you'd understand why investors will come, right? It's a chicken and egg cycle. And in Singapore, even if it's small, there's capital here, there's rule of law, there's a melting pot, etc. So, and then you have the stuff that the NRF did and all of that to really kind of jumpstart the ecosystem, right? So in both instances, you needed to have enough investors interested so that some entrepreneurs will raise their hands and say, okay, back me and let's do something.
Mm-hmm.
And when you have the first couple of successes, then more investors get interested. And then when there's more money that comes in, more entrepreneurs show up. And then you start to have that virtuous cycle going, right? Let's just say maybe the Philippines doesn't have the same kind of obvious attraction for investors. Maybe in the earlier days, the local conglomerates and families weren't really interested in investing in tech startups. You'd start with angels. So you have to work a little harder, right? Now, we backed several already. One of our most successful ones was Coins.ph with Ron Hoves, but he's an experienced entrepreneur coming from Silicon Valley to Singapore. He was able to raise money and build a business. And so in some sense, he, together with some of the early players, helped get this started, but it still was slow going. And now, again, I'm hoping that with the help of this recognition from the SVCA, more people pay attention to the country. It's still 110 million people. It's still, growing quite well. There are many problems to solve. And now, hopefully there are many more entrepreneurs who will be inspired by this also to raise their hands, quality entrepreneurs to say, okay, I can take the risk. And so hopefully more investors, like with this latest round, I guess it was, when people hear about the lineup, I mean, we have a very strong local partner with the Gokongwei Group, JG Summit and Robinson's Retail. But, to bring in Pavilion and IFC and Tencent, I mean, it's kind of solid, right? And people would like to think, that's kind of smart money, right? So what are they seeing that we don't see? So I'm hopeful now that there's a little more curiosity around the country, and hopefully GrowSari does well, and we have alumni who will start new startups, and I'm sure there's a lot of talent in the country. I'd like to believe. That will come up with new companies that will solve meaningful problems in the Philippines and will get their just rewards. So it's a timing thing, but I think we'll get there.
Nice. Paul, I'm going to wrap up the interview with a final question.
Sure.
So since we're on the topic of Philippines, can you tell us 2 industry trends that you are watching very closely?
In the Philippines or anywhere?
In the Philippines.
Okay. Can I not talk trends? Can I just talk about kind of concepts or companies that we're investing, because we have our 4th fund? The way we like to invest is we like to look for entrepreneurs with an insight that not too many people will have. And 2 of the deals that are coming up for us, one is in weather. See, I'm sure you wouldn't have thought of that as a trend.
Not immediately.
Yeah, to be fair. Or you wouldn't have expected that out of the Philippines, but we found this guy who was from the industry. And, weather is an important thing. I mean, we take it for granted. But there are major players around the world, guys like IBM, who sell kind of weather data to governments and corporates because it helps them manage their risks. It helps them plan stuff. And this guy coming from the industry was saying, there's something here. And so what he's cobbled together, it's a company called Comunidad. He's cobbled together, I guess, a bunch of sources of data to be able to come up with really accurate weather forecasting down to a city level, right? And again, that's important because each city needs to be able to monitor how they're going to manage. Sometimes there's floods and all of that stuff. And then productize it, whether turn it into a dashboard for the city government to use, or for alerts and all of that good stuff. And now we're branching out outside the Philippines. We're in India, and we're going across Southeast Asia. But this is what I mean, right? Like, I'm not really going into the country looking for trends as much as I'm going into the country looking for entrepreneurs and opportunities, right? And that's kind of one company. We have another one coming up that's trying to tackle financing for low-cost housing.
Okay.
And doing it in a different way, where the founder is actually French and used to be in the stock mutual funds, hedge funds business. And what he wanted to do was put together a portfolio of assets, but instead of stocks, he's putting low-cost housing. I'm talking $5,000 to $20,000 houses, really cheap. Yeah, you can buy a house for that cheap. And he's found a way to do it where he uses data to say which areas the houses are in demand but are undervalued. He's able to find automated ways to work with brokers and builders, and he's proven that he can invest in a property, fix it up, and sell it in 6 months and make a return. And I think he sold over 500 properties this way. And because of COVID, he started to prove that he could do this without even visiting the house. And he's doing it within Manila, within the city. And now we're going to do it outside Manila to prove that you don't have to go see it. But imagine if we could pull this off. What if we could do this all over Southeast Asia, where it's fully automated? So it's kind of a weird model, right? But I think it's kind of cool and it's kind of interesting. And again, we found an opportunity, which is low-cost housing shortage, financial sort of financing challenges. And we found an entrepreneur with an insight, and he's built really interesting software. So again, stuff you might not expect to find in a place like the Philippines. It's not your typical fintech or marketplace or digital bank story. But we think they're interesting, and time will tell if our bet was right.
I suppose time will tell. And the idea is always to look for the hidden gems, right? That people might not always look out for.
Because it's very hard sometimes, especially if you're thinking about fundraising. A lot of the times you have to think about what's the global comp, right? What's the India equivalent? What's the China equivalent? What's the US equivalent? Yeah. And if there's none, what are you going to do? And the two examples I'm giving you don't quite have these equivalents.
Well, I have to say too that, if there is none, then of course the first question you ask is why isn't there any? Right?
Yeah, right. So this the guys who went, and it's sorry about the two guys who went to sell shoes in Africa, right? So one guy went to Africa and saw there were no shoes, and the same guy, another guy went to Africa and saw there were no shoes. Both of them came back. One guy was sad. He's saying, "Oh, there are no shoes in Africa," and then the other guy was happy. There are no shoes in Africa. So sometimes you just have to pick which one you are.
Yeah. Well, Paul, thank you so much for this conversation. I really enjoyed it. And once again, congrats on your award win.
Oh, no, thanks again for having me, and thank you to the SVCA. We were excited to try to win one, but the ability, just winning both in 1 year is sweet. So thank you for that.
And a big thanks to Paul and Claudia for sharing your thoughts and insights with our audience. I enjoyed the conversation as well. For our viewers out there, stay tuned for the next episode in this 4-part series. I hope you found the session beneficial. Take care and stay safe. Goodbye.
Bye.